Hello everyone, good morning in Europe, good evening in United States. This is Akra with another daily outlook video. As you know, in this series of videos, we are looking at the market to see what is going on in the market, what is happening, what's happened, and what is our expectations from for today's financial market. So as you know, since last Friday, we had some concerns about the Omicron variant of coronavirus, and these concerns are increasing. After Netherlands, we had the France, Denmark, Norway, and some other European countries that also followed or joined the Netherlands to have more restrictions planned since last week until January 6th, some countries and some countries till mid-January. These restrictions plans increase the market risk and fast spreading of coronavirus or this Omicron variant of coronavirus, no matter increasing the market risk. As you see, the US dollar index, this higher market risk, increased the US dollar index. At the same time, the US 10 years bond yields fell to 1.36, to the lowest level since December 3, which it was at 1.35%. This higher market risk, increasing the US dollar demand at the same time, putting the with the more kind of stronger US dollar, putting the gold a little bit under pressure and holding kind of the slowing down the gold bulls because gold's demands also with increasing the market risk and falling as a result in the stock markets, gold demand also increasing. As you can see here, the US 500, S&P, USA 500 or SP 500 is decreasing. Just increasing the gold demand for now. This increasing market risk, increasing the gold demand as well. Therefore, our expectation as we were talking about that before, for the gold to have it above around $1,820 more or down around these levels. It is same, so we have it at these levels. About the oil market, this increasing the market risk, these restrictions, for sure, it means that the less demand for the oil because restrictions means less troubles, less leisures, less funds, and less energy needed. So if we don't go so much to different countries, if we do not travel, it means that the less demand for the energy, especially for the jet oils, which means that the less demand for general in oil market. As restrictions increasing in some countries like UK, they are starting to have again other stimulus packages, especially just not for all the businesses, for not for everyone, just for the businesses that hitting by these restrictions, especially the hotels, especially the cafes, restaurants, hotels, and the tourist industry in general. But still, the oil demand will be less. Therefore, the outlook for the oil from technical and fundamental side both changed, and now we are in a downtrend. In the stock market, for two reasons, we are still waiting to see more bears here. Firstly, the the effect of the Omicron variant can still put the markets under pressure. At the same time, with having the Omicron variants in the market, we have the hawkish policies from the Federal Reserve as well. During the weekend, several Fed members, including who was speaking, during the week. If I don't remember, if I don't mistake, Williams, Waller, Daly, and some others. So especially the what I remember about Williams and about the New York chairman Williams and about the yeah, Waller and Williams. I remember about them that they were speaking about the more hawkish policies and that the Fed is not going to change the policies during the next year and for to at least two or three rate hikes still we will gonna have, and this variant of the coronavirus is not going to hit the markets, and we are not in a risk situation right now. So therefore, the economy can increase better than before. So this is also this hawkish tones, again hawkish comments again increase the US dollar demand, and we can put the stock markets a little bit under pressure, as you can see. Sorry, as you can see here in the SP 500 chart, we have the same situation for the Nasdaq and the Dow Jones charts as well. In the European market, Europe was a little bit under pressure with the hawkish tones of the Fed members and increasing US dollar. But these levels seems like oil Euro USD count creating a little bit of more stronger support for itself around 1.12. Therefore, falling under the 1.12 a little bit out of imagination right now. So Euro USD bulls will start some, even if it starts someday in it cannot be the bulls. I cannot say the bulls will start the day, but it's better to say that the peers in the EURUSD chart can pause in these levels. Following this news and events, you can see this is the Euro 50. European stock markets also falling. The same thing happened in the UK with the FTSE chart. This is the FTSE you can see here. And GBP, USD, sterling against US dollar also is in a weaker situation, same as other symbols. In China, government increased decreased the fell the cut the interest rate earlier today with just 5 basis point from 3.85 to 3.80, but still it's a little bit, it can we can count it a little bit hawkish policies. Uh, this is yeah, this is generally what's happening in the market and what's going on from the from the economic calendar point of view. Today, we don't have that much data that can change the market situation and market attitude. Just we have some speeches from Turkey, we have Germany, and report from Germany. We don't have that much important news today and tomorrow. Wednesday and Thursday, we will have too much news. The weekly outlook video will be out in just few hours. In that video, I will explain the outlook of the video. But for now, for today, this is what is the market situation, and this is what we are waiting to see in the market. Let me see once more. That is there anything else that if I may forget about to say about that? Uh, no, there is nothing. And Bank of America research also shows that. That tech stocks will be a little bit more under pressure, but the stock market is totally under pressure. During the 2021 till now, the oil was the biggest winner with 48%, Nasdaq with 25%, and banking sector with 21%. And biotechnology with losing 22% was the biggest loser. And oh yeah, the silver also lost the 19% as as one of the biggest losers. So this yeah, the use about the bond deals also I talked about that the situation of bond deals. This is the general market situation what we had and what is going on, and the expectations still for the stock markets is a downtrend. Gold around 1,800 for US dollar also demand, and bulls still will be there. Okay, thank you so much for watching. Let me know your idea. If you have any comments, let me know what you want me to cover more, what you want to hear more, and what's your expectations from these videos to make it better, how we can improve these videos. Thank you so much for watching these videos. See you guys tomorrow. Bye bye.